Hello and welcome to Channel One Local. I'm your host, Brian Christopher, and I want to thank you for joining me for this episode. Today, we're going to pick back up with the customer experience shift. It's the episode that follows up the previous two, where we were speaking about AI handling hundreds of millions in banking conversations and smart contracts that audit themselves before deployment. That's impressive tech. But here's what really matters. This is the shift. Opening a bank account used to take 3 to 5 days. Document uploads, compliance checks, waiting for approvals. Now, some banks are doing it in under an hour. You can even get online today and open an online checking account in less than a minute. So today we're closing out the AI integration watch arc between these episodes by answering the only question that really matters. What does this mean for the customer? Because all the AI and blockchain innovation in the world is worthless if it doesn't change how real people experience their money. Back in December of 2024, the customer experience was transforming faster than most people can realize. And now, December 2025, it's at exponential growth and mind-blowing to most of us. So the problem here that needed solving was that traditional onboarding was taking a lengthy period of time, 3 to 5 days on average. 40% of digital applications abandoned mid-process. Manual data entry, unclear communication. And over 35% of bank customers switch to competitors due to poor onboarding experiences. And this is why this is so bad. The first impression is everything in banking. Abandoned applications equals lost revenue. Customers expect the same speed they get from other apps. So here's what AI has changed. Banking AI-powered onboarding report, reducing timelines from days to minutes through optical character recognition, OCR, biometrics, and natural language processing. It's what I alluded to a few minutes ago in opening. Under a minute onboarding. One major implementation reduced onboarding for non-complex customers from an average of 5 days to less than 1 hour, representing a dramatic improvement in customer acquisition speed. How it actually works, that OCR technology, snap a photo of your ID, AI extracts all the data automatically, no manual typing, facial recognition, a selfie plus ID photo comparison, instant identity verification. The AI chatbots guide you through the process, they answer questions in real time. Automated compliance. AI runs KYC and AML, checks in seconds, not days. And the personalization layer. It's not just faster, it's smarter. AI analyzes your profile during onboarding, suggesting relevant products before you even ask. Conversational forums that adapt to your answers. And progressive KYC. Collect only what's needed for your specific case. So I'm going to give you some examples here. Citibank and HSBC's implementation. Citibank has deployed AI chatbots that provide tailored support to new customers, guiding them through onboarding efficiency in real time and form completion assistance, while HSBC automated responses deliver quick, accurate answers during onboarding processes. The customer impact: 60% of U.S. bank customers now rely on mobile apps for transactions. Digital onboarding adoption jumped to over 31% of new accounts back in 2020. Bank accounts automating 50 to 70% of onboarding tasks achieved 35% cost efficiencies. Hyper-personalization in action here. What hyper-personalization actually means. A 2024 Salesforce survey showed 61% of customers want banks to offer financial advice tailored to individual customer needs, making hyper-personalization a key factor in winning customer loyalty. Here are products. These are some examples. DBS Bank of Singapore provides clients with a mobile application featuring over 100 automatic personalized insights as far as produced by their proprietary AI driven predictive analytics engine. What this looks like: AI tracks spending patterns, predicts upcoming expenses, suggests savings opportunities, alerts about unusual transactions, all automatic, all personalized to you. And the Royal Bank of Canada, RBC, uses something called the Nomi Suite. It provides information about account activity and nudges and reminders about relevant financial activities, and automatically shifts funds into specifically designated savings accounts, having opened 250,000 new savings accounts with Nomi, users saving $225 a month on average. And here's the power of this: customers aren't managing money, AI is helping them manage money. It's not reactive. You check your app, it's proactive. Now the app's alerting you, and it saves customers real money. $225 a month, that's equaled out to $2,700 a year. That's a good chunk of change. Capital One's AI assistant uses natural language processing to understand customers' questions and provide immediate answers, while also incorporating AI into fraud detection through machine learning and predictive analytics to identify suspicious credit card activity, from spam to relevant. AI analyzes transaction history, browsing behavior, demographic information, creates highly personalized market campaigns, tailored messages and product offerings that match individual preferences. So a frequent traveler receives offers for traveler's insurance, foreign exchange services, travel credit cards, young professional with strong savings, investment options tailored for first-time investors. The business impact: banks integrating AI and human collaboration in wealth management and customer service can increase revenue by up to 6% within 3 years. That's from an Accenture case study back in 2024. And so let's talk about the 24/7 intelligent assistant, 2025 breakthrough. Forrester predicts by the end of this year, 2025, we'll have broken through for conversational banking, with leaders using AI capabilities to make in-app bots smarter and more useful through features like app navigation assistance and personalized financial guidance. What this actually looks like: Wells Fargo, their assistant, helps customers track spending, predict expenses, and make smart financial moves with real-time guidance and automated insights. Morgan Stanley's Debrief, a tool that generates meeting notes and action items for advisors, which helps in personalizing client offers based on comprehensive interaction history. Now, here's the evolution of support: old model, call center, wait times, limited hours; new model, AI assistant available 24/7, instant responses, learns from every interaction. PenFed Credit Union is implementing Einstein, a generative AI virtual assistant, to streamline communications by suggesting responses for services representatives in chats and emails, starting with internal employee support before expanding to member-facing services. The human AI combination, not replacement, it's augmentation. AI handles routine queries instantly. Complex issues route to human specialists. Humans focus on relationship building and strategic advice. AI provides them with complete context before they engage. So here's the productivity gain on this. One contact center implementation now processes 2.78 million calls per year with AI-driven analytics. AI transforms raw conversation data into actionable business insights, real-time analysis, or contact reasons enabled prediction for future inquiries. And here's what's on the horizon for 2026 out of this year of 2025. Agentic AI enables single or multi-AI agents to carry out tasks and make decisions autonomously with human oversight, moving from supporting humans to actually performing end-to-end workflows like customer onboarding from trigger to final memo. McKinsey's real world example here. One global bank implemented an agentic AI factory with 10 agents for end to end KYC workflows, with each squad containing 4 to 5 AI agents, including a lead agent, an expert practitioner, and a quality assurance agent, specifically reducing manual hours in customer onboarding. This was significant. It reduced the man hours of customer onboarding by using these agentic AI agents. Embedded finance. Forrester anticipates embedded finance will gain broader appeal going into 2026, involving seamless integration of banking products and services into non-banking platforms and applications. So what this means, you're shopping on a retail app, banking services appear right there. No need to leave the app to get your financing. The bank becomes invisible but omnipresent. The challenge ahead, more personalization requires more data. Banks must comply to GDPR and data protection regulations. Customers want personalization, but also privacy. So the solutions being built here, moving forward into 2026, is that explainable AI, that XAI that we spoke about in the last episode. Banks can show how decisions were made, blockchain audit trails, immutable records of AI actions, that human in the loop for high-stakes decisions, transparent data usage policies. 78% of organizations now use AI, up from 55% early in the year. 75% of banks with over $100 billion in assets expected to fully integrate AI strategies by 2025. And the Gen AI could add $200 to $340 billion annually to global banking. So let's bring this all together. Over the 3 episodes we've covered, in episode 1, AI in traditional banking, that's 676 million customer conversations handled by one AI assistant, fraud detection 300% more effective, entire development teams freed up for strategic work. Episode 2, we covered blockchain meets AI, smart contracts that audit themselves, DeFi protocols with AI agents managing hundreds of millions, security systems catching exploits in real time. And here in episode 3, the customer experience, we've discussed onboarding in under an hour instead of days, personalized insights to save customers up to $2,700 per year, and 24/7 AI assistants that actually understand context. So the bottom line here of all of this is that this isn't the future. This is December of 2025, right now. This is happening now. The banks and fintechs implementing this well are winning customers. The ones falling behind are losing the customers. So what's next here on Channel 1? We're going to continue this into the next episode, which is Following the Money. We're going to track where institutional capital is actually flowing concerning crypto, digital assets, and blockchain. Which fintech sectors are getting funded and which ones are dying. How the money movement reveals what's real versus what's hype. Because AI integration is one thing, but following the money, you'll see what's actually going on to survive and to thrive. So if you found value in this AI integration watch series, please subscribe so you don't miss the episode continuing on with Follow the Money. Please drop a comment and tell which bank or fintech AI implementation impressed you the most. Share this with anyone who's trying to understand where banking is actually headed. The transformation is real. The question is, are you paying attention? So until next time, I'm your host, Brian Christopher. Take care.